Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, September 23rd, 2019 edition of DecisionPoint. I am here with my father, Carl Swinlin. Thank you very much for joining us today. And if it's your first time, I hope that you will come back next Monday. We look forward to hopefully seeing you again. So let's go ahead and get this started. How's everything going up the hill there, Dad?
Very good.
Yep. What are you thinking of the market right now?
Well, one of the things that I think people should be aware of is that we had quadruple witching options expiration last week, and Fridays and the following Monday will tend to be fairly calm because they like to keep it calm for all the stuff that's rolling over. Mm-hmm. So that would explain why today not much happened.
Yes. Yeah, I have to agree with you there. All right, well, let's look at what we're going to cover today. I will be looking at price relative to the S&P from all of the major indexes. We'll look at the global markets. I will review those broad market indexes, our scoreboards. Also, I'm going to be doing our weekly sentiment update as well. And then I'll look at the DP indicators, and Carl is going to just bounce right on into his grab bag after I'm done with that at about quarter after. So let's go ahead and get it started. Let's look at the DP scoreboards. We did have a signal change last week. I should say signal changes. We saw both the S&P 500 and S&P 100 on their weekly charts. The weekly PMO crossed above its signal line and gave us two new buy signals for the intermediate term as far as momentum. And if you look at the NASDAQ 100 and the Dow, as you can see, they did not get those signals. And in fact, as of last Friday, the NASDAQ 100's weekly PMO actually turned down below its signal line. So certainly some trouble out there as far as the techs go. And looking at the sector scoreboard here, these are intermediate term trend model buy signals. That means that the 20-day EMAs are above their 50-day EMAs. So we're looking pretty good here, except for energy. We still haven't gotten a buy signal out of it.
Erin,
yes?
We did get a buy signal on energy Friday. So
okay.
I had to let you know on that.
I didn't get...
Blame it on me.
Blame it on you? Oh, I don't get to do that too often. But yeah, I guess at this point then we have all green buy signals for the intermediate term trend model. So in all of our sectors, we are seeing we're seeing that we've got the 20-day EMAs above their 50 on the daily charts. As far as the long-term trend model goes, it's still looking pretty good. This means that the 50-day EMAs are above the 200-day EMAs for all of these sectors, minus energy, because that one did not change. All right, let's go look at some of those charts I was talking about. I'll start right over here. It looks like that might be, oh, no, I had it already on this one. Okay, here we go. All right, so this is our price relative chart, and you'll find this in the DecisionPoint live chart list, mine. It's up there. You just go into the articles tab and you will find it there. Let's see, I always do this. I lose my mouse every time I come out of that PowerPoint when I'm on air, not when I'm off air. It always works when I'm off air. So anyway, what we're looking at here, though, if I can get my pointer, there it is. We're looking at the price relative. So this is telling you the performance going on in these indexes against the S&P 500. And I think the best news here has been that we are in a rising trend as far as the S&P 400 mid caps and the S&P 600 small caps. We are seeing some improvement. However, if you look at last week and what happened, they did underperform the S&P 500 overall, but I'm still looking at this as still a rising trend. So I think that's still positive. There's that NASDAQ. You can see that while it's performing similarly to the S&P 500, it is still slightly underperforming. And remember that NASDAQ 100 had its intermediate term momentum turn negative on Friday last week. So certainly some problems in the technology area, and you really want to see the strength there if you're going to get a nice rally to new all-time highs. Industrials have turned around to the downside. They're not performing as well as the S&P 500 just yet. Well, they were, but not anymore. Okay, let's go ahead and look at the broad market indexes on one chart. Find this very helpful. So as you can see, this is the SPY. And one thing I do want to note with the SPY is we did get an all-time intraday high on the SPY. We did not see that on the S&P 500 itself. So I just want to point that out. The S&P 500 equal weight RSP, you can see that it did not form a new high as far as the equal weights go. And again, we're still watching these trading ranges on the mid caps and small caps well below their all-time highs that were hit back in September, October of last year. So while they started to perform a bit better than the S&P 500, they're still not breaking out to even challenge those all-time highs they had before. And there you go. There's the NASDAQ turning down at the resistance of its all-time highs. And again, the NASDAQ 100 not doing quite as well here, declining tops trend line. Global markets, I just wanted to point out a few things on this chart. Mainly, we're seeing a breakout to new all-time highs on the TSX. You can see we got a little tiny breakout to a new all-time high for the French CAC. And we've got the Nikkei breaking out from a declining trend that it has been in since that top back in September, October. Not quite there to really challenge those all-time highs, but certainly seeing some improvement there in the Nikkei. Also, India, nice big move to the upside that we saw. But Shanghai still having problems, not even testing that declining tops trend line. All right, quick peek at our scoreboard indexes. You can see that right now, with the decline we're getting here, the pullback, we've got the PMO now starting to turn over. It decelerated and now it is pointing lower. I do have a negative divergence or reverse divergence noted here. We had a really big pickup here on the OBV to a nice new high. But what happened with the Dow? Declining trend. So that's telling you, despite all of that volume, price is supposed to follow volume and it didn't. So that could be a problem. All right, real quick look at the weekly charts just so I can show you what about those PMO buy signals. It looks like the Dow has a PMO buy signal. That's because of trading today. As of last Friday, it had not passed above its signal line. We are seeing some deceleration here. It'll be interesting to see if it can hold on to that intermediate term buy signal on the weekly chart. NASDAQ 100 also losing some momentum and quite the negative divergence going on here from that top we saw back here in earlier August. Really big negative divergence there. And again, that's the area you really want to see performing well. That's in the aggressive sector, the technology area, and seeing more weakness, relative weakness especially, certainly should give us pause as to the overall health of the market. And look at that weekly PMO. It had turned down. It's continuing lower as of today, but we'll have to see what happens with that on Friday when it goes final. OEX, not much different here. We do have the same kind of a reverse divergence going on here as far as volume goes. I showed you already that we got the buy signal, but notice it's already decelerating, that PMO on the weekly chart as of today. S&P 500 daily chart, there we go. Reverse divergence going on again. We are seeing this push on the OBV to new highs. And what's going on with price, we're not seeing a follow through there. There's that PMO is now decelerating, going the wrong direction. All right, here we go with the buy signal that came in on the S&P 500, like I said, last Friday. There you go. Still seeing that rising wedge. That is a bearish pattern. So I don't want to see that on the weekly chart. All right, here's a sneak peek at a little bit of sentiment. What I'm noting here on our charts, we certainly did not see any climactic readings today. We did have some on Friday to the downside, looked very much like an initiation to me, especially coming in with a VIX topping right there. At this point, I think the good news, I suppose, if you want to look at it that way, is that as far as sentiment with the VIX, we are seeing it, bouncing up here above its average. And remember, I do invert my scale. So this is saying that, we still have some bullishness out there. Typically when we, move like this above the moving average, like we saw back here in July, typically you're going to be seeing that prices are, prices internally strong. But I'm not seeing that right now, despite this VIX traveling here above its moving average. Our short-term indicators certainly took a dive and are continuing lower. They are now below the zero line, and I would say not at all oversold. They are in neutral territory. They could continue to fall. We don't want that, but it looks like that's what we're going to get, which would imply that we're going to get some lower prices in the shorter term. Intermediate term, we did turn over, and as of today, we are seeing a negative crossover for the ITBM. So on top of that, we have a, I guess you could call reverse divergence here, where you have the volume indicator with these new tops and even with the breadth, and we're getting that declining tops trend line. So that does suggest to me that we are in a very difficult, a nervous type, cautionary, I would say it's a cautionary environment right now as far as the markets in general. Let's go ahead and look at a little bit of sentiment. Remember, sentiment is contrarian, so we're really trying to take the pulse of investors in the market in general and find out how bullish or bearish they are. When people are very bullish, that is bearish for the market. So let's see how many bulls we have out there. All right, so this is the put-call ratio. It hasn't updated for today. This is as of Friday. But typically when you start to see a top in the put-call ratio and start to watch it go down, that's kind of warning that you're going to start seeing a decline in price. And we've got the tops on both of these put-call ratios for the CBOE and equities. And really even for the OEX, this is usually used more so as a hedge, but I'm noticing similar activity as far as the put-call ratio goes on the OEX. AAII, the American Association of Individual Investors, getting more and more bullish. As you can see, we have certainly we've moved the ratio above 1. It's about 1.25, which of course means that we have more bulls than we have bears. If we get to that twice as many bulls area, that would be especially interesting, but we haven't gotten quite there. So we could see a little bit more bullishness out there among participants in the market. You can see we're not really at the highs that we've seen for bullish sentiment. So, but overall, looking more bullish here as far as the individual investors go. Name exposure. This is also as of Friday. You can see that exposure did move up somewhat. Overall, though, it's not really peaking at the levels that I usually am concerned about. And then even when we do get these high levels of exposure, these guys kind of tend to be right at the beginning. So when we start to see those really high exposure levels, a lot of times you're still going to see a little bit of a move to the upside out of that, but we're still not really at those high exposure readings that I would.
Erin, this chart is actually final as of Wednesday.
Right.
They closed the poll on Wednesday. So I mentioned that in case anybody wonders whether something big happened on Thursday and Friday and why is it reflected. So it's important to know when they do cut those off.
Absolutely. Yeah. I mean, when I go over the sentiment on Mondays, it's a little bit stale.
Yeah.
But there's still a lot to be gleaned from it. I'm sure you agree.
Oh, yeah.
So Wall Street Sentiment Survey, notice the difference, very bearish. This is the poll that market timers are given on Fridays. We're asked to tell whether we think the market will go down or up the next week. So this is a very short-term sentiment indicator. And, usually when we start to see these really bearish readings, you do start to see the market move to the upside. However, we tend to be right a lot of times as well, as you can see over here. So, at this point, the fact that individual investors are still really bullish, I would take this as another sign that there's some problems out in the market. Right-X ratio, this tells us how much money is going into bear funds, bull funds, and money market funds. So it tells us really and gives us an idea of the sentiment just based on where the money is. And currently we're seeing an increase in bear funds and in money market funds, and a decrease in the investment of the equities or those bull and sector funds, which I find very interesting given what we're seeing on that individual investor chart. When people are asked, they're saying they're bullish, yet it looks like their actions are a little bit different. Seeing more money moving into cash, less money into the equities. So to me, that's kind of an interesting dichotomy there, but that's kind of why we watch the money, because money where your mouth is, I think, is a little bit more useful than finger in the wind sort of poll. So last one I'm going to look at is the gold sentiment. Right now, we're still seeing discounts. They're lower than we've seen during this move to the upside, obviously. And you can see where it's really not too far off than the area where we were moving pretty much sideways. So I don't feel like the gold sentiment is telling us too much right now. Just an aside, I'm watching for a possible head and shoulders forming here after this big rally to the upside, but we really don't have a top here that's settled in. So I'm just waiting and watching. It could just turn out to be nothing. We could end up seeing just some more movement sideways here, or even a test of those highs at the top there. All right, so I'm going to pass it to Carl, my dad, and what do you have for us today?
Lots of exciting stuff.
Of course.
Since we're on the gold, that's a good place to jump off from here. One of the things that's important, I think, is that this rising trend line has actually held, and we've got it moving above that. PMO is turning. It may have turned up by a minuscule amount, but it is certainly acting that that's what it wants to. I think it's a good thing to have the sentiment indication being negative, because it means people do not believe this rally, even though from the bear market low, I think it was 2013, it has risen 50%, and yet people are still negative here. So that's a really good indicator to me that we're going to go higher. When it turns green, when they start paying a premium on this the premium discount on the physical gold trust, the closed-end fund, when they start paying the PM premium, that means sentiment is turning bullish. That won't mean that the move's over, because I think it will stay bullish for a long time once it starts going. Okay, where I was going to start was with, oops, there we go. Something simple to start out with here. Here's the SPY with its 20-day EMA. What I wanted to do here is moving as a starting point to some other charts we're going to go to. But you see with the, most of the time when it goes below its 20 EMA, it's just a short-term move. But every single longer-term move starts with a short-term move with a crossover. So once it crosses down through that line, you should be a little more worried about possibilities of something going wrong. Where I apply this is in this, and I've gone over this before, but I had some extra points to make here. But here's the percent of stocks in the S&P 500 index that have fallen below their 20 EMA. We haven't got an update. This set updates pretty late in the day, probably around 3:30. So nothing we can do about that. But I did want to demonstrate that what we're looking for is deterioration in this before a top. Right now, I'm thinking we've got a top here, but and there's been some deterioration, not a lot, but it's like about 15%. And so want to keep an eye on that. Now, applying the same theory to the tech sector, we've got really a sharp decrease. This is about a 50% decrease in stocks above their 50 EMA in the tech sector. And this is ahead of the top. So that is not a good sign. You can see here and here. It's not infallible, but it's not a good point. Let's see where same point. That's my place. Okay. Moving on to another subject. My point that I wanted to make on this chart is to point out that sometimes our indicators are just not of any value. I mean, they just don't. They give us warnings of stuff that's never going to happen. During this particular leg of the bull market, it was ruthless. I mean, I can remember going through this and say, well, watch out for a pullback, and it never came. Look at all these tops. Now, if you got something, it was really minor. And then now we're back in business on these indicators. And when they break down, we should be very cautious. When they get overbought, we should be watching out. Now, that wasn't a very much of a pullback, but then the second one came along, and there you go. And right now, we've got we're overbought and have turned down, and it's just not a pretty picture right now. The next thing I wanted to talk about was the parabolic again. This is one of my favorite formations. Back last week, something happened with the U.S. Steel, and I can't remember what it was, but it made me look at the chart to see how things were going, and I invariably, when I'm curious, I'll have to go to a weekly chart. Now, the weekly chart, you can see, look at numerous parabolic moves here, and then with huge retracements, right here, and then you go to the monthly chart. And there's the biggest of the granddaddy of them all. But on this chart, I would say it's getting down to the low end of the range, so maybe you're going to see a buying opportunity here. But the thing, again, is that parabolics, watch out for them. Sometime maybe you want to take your profits right in here. It's a huge 4-time increase right there. And of course, you trying to wait this long, good luck on getting out. If you started here, you wouldn't feel too bad if you managed to get out here.
Yeah, trailing stops are pretty useful on a parabolic, but even so, it still might not trigger if there's just a run on the stop.
Yeah, not soon enough. You shoot right through it. Okay. Now that we are covered the ground that I wanted to, let me cover the 4, which I skipped just to make sure I covered all the neat stuff that I had in the basket, in the bag, should we say. Okay, the dollar, it's not doing too much right in here. I think the weekly chart, which I wouldn't normally look at the first day of the week, but that shows the picture. You've got a breakout of a long-term resistance, and it's not, as I said before, it's not decisive, but it's definitely an important move at this point. With USO, look how quiet. Of course, it was one day this week, but it's not a big deal. That what happened in Saudi Arabia is not a big deal at this point. And I really didn't think it was going to turn into it. We had that one-day move, which, that was panic, but it's settled down again, and it's back within this range. So I'm not, at this point, I'm not worried about oil. Treasuries, we've basically in a range here, and this is where it started becoming excessive, and we're kind of in the middle of before the break, and to where it got really excessive. So right now, I'm kind of looking for it to stay in this range, unless something else happens in the interest rate department. Just a quick look at this long-term view of Treasury yield, 30-year Treasury yield. It's in this falling wedge, which I would take to mean at this point that we're going to start back up this way. Ultimately, it's going to break through. I'd say that's pretty obvious because it cannot go too much lower. But I mean, the downside, when you look at it from here to here, the downside on this move is pretty much run the course. Excuse me. Okay, our short-term yield array. Not updated quite yet, but that's another one that they just set updates pretty late in the day. And you got the 1 month and the 3 months that are yielding higher than all these, which are longer-term instruments. And here's the gold and silver cross indexes, which I updated earlier today. Not looking terribly encouraging right here, especially the silver cross index is just about ready to turn over in conjunction with what I think right here. I believe that is the top. So I think that about runs me out of
Yeah.
And you want to take
You ended like perfectly. I do want to encourage everybody to go to the DecisionPoint blog. You just go up to the articles tab, and if you click on that, it'll take you to the blogs page, and just click on the DecisionPoint blog. We've been writing some great stuff lately. Carl did his weekly wrap last Friday. And if you haven't checked out the new DecisionPoint Daily Diamonds, you want to check out that report. Thanks everybody for joining us today. And if you could complete that survey as you exit, that would be absolutely great. And as a quick reminder, we do air on Mondays now at 5 p.m. Eastern, so join us then.